Bitcoin is shooting up toward $100,000, and MicroStrategy has jumped an amazing 72% since the start of November, twice as much as Bitcoin itself. What's behind this big move?
Time to spotlight Bitcoin and the move closer to 100,000, although we aren't reaching that today, at least according to what we're seeing in today's action. Bitcoin trading around 96,500. Joining us.
One proxy is Virginia-based MicroStrategy, which has been betting big on Bitcoin. Yesterday, it announced it had acquired $2 billion US worth of the coin in the past 2 weeks.
Hey everyone, welcome back to the MacRaider channel. If you haven't subscribed yet or liked this video, make sure to do that now. On this channel, we cover everything about Web3 and crypto. Today, we're gonna dive into MicroStrategy. Originally, MicroStrategy is a leading provider of business intelligence and analytics software, helping organizations make data-driven decisions with comprehensive reporting and analysis tools. But what really made them famous is their involvement with Bitcoin. MicroStrategy has become a major player in the cryptocurrency space, especially with its aggressive strategy of acquiring Bitcoin. So let's take a look at their recent activities and overall approach to Bitcoin investment. As of November 25, 2024, MicroStrategy announced they snagged an additional 55,500 Bitcoins for about $5.4 billion. This big purchase bumps their total holdings up to around 386,700 Bitcoins. At current market prices, MicroStrategy's Bitcoin holdings are valued at roughly $37 billion. These are some staggering numbers that really highlight how aggressively MicroStrategy is investing in Bitcoin. MicroStrategy keeps buying Bitcoin because the CEO, Michael Saylor, firmly believes it's a game-changing asset and a solid hedge against economic uncertainty. With its limited supply and ability to resist inflation, Bitcoin fits perfectly into Saylor's idea of perfect money that beats traditional fiat currencies.
Every day of my life, I tell people to buy Bitcoin. Some people want more Bitcoin, right? The joke I have is the only thing better than Bitcoin is more Bitcoin. So.
All right. So this year, Bitcoin's up about 43%, climbing from $69,500 to a peak of $98,000 in November. But here's the kicker, MicroStrategy has skyrocketed even more, up 133% at its highest point. Sure, it's dipped a bit now, but it's still up 53% since the start of November. Right now, MicroStrategy's market cap is sitting at almost $90 billion, while its Bitcoin holdings are only worth $37 billion. That's where the term MicroStrategy Premium comes in. MSTR is trading at an insane 2.42x the value of its Bitcoin holdings. So, why are people still pumping MSTR when their Bitcoin is only worth 40% of the stock's market cap? Let's break it down and dive into the numbers. You're probably wondering, how does MicroStrategy have so much money to keep buying Bitcoin? Well, they're actually issuing convertible bonds to raise capital for their Bitcoin purchases. What exactly are convertible bonds? Let me break it down for you. A bond is essentially a loan you give to a company or government. In return, they promise to pay you back with interest. It's considered a relatively safer investment because you know what you're getting, regular interest payments and your initial investment back at the end of the term. A convertible bond, on the other hand, is a type of bond issued by a company that can be converted into a predetermined number of shares of the company's stock. It starts off as a regular bond, paying you interest, but it gives you the option to convert it into stock if you choose. So, MicroStrategy is using these convertible bonds to raise money, which they then use to buy more Bitcoin. It's a strategic move that allows them to leverage investor capital to expand their cryptocurrency holdings. Alright, let's imagine you buy a convertible bond from ABC Company. This bond has a face value of $1,000, pays 5% annual interest, and can be converted into 50 shares of ABC stock after a certain date. To keep things simple for this video, we're not going to get into the concept of forced conversion prices right now. Now, if ABC stock price rises above $20 per share, converting your bond into stock could be a smart move. For example, If the stock price jumps to $30, those 50 shares would be worth $1,500 and you can earn 50% with this investment. But if the stock doesn't perform well, no worries, you still have your bond that pays you 5% interest, and you'll get your $1,000 back when the bond matures. So, why does MicroStrategy issue convertible bonds to raise funds? Well, it's mainly because they can offer lower interest rates. Companies can do this thanks to the added value of the conversion option. Investors are willing to accept a lower return in exchange for the potential upside of converting the bonds into stock. Another reason is delayed dilution. Unlike issuing new stock right away, which would immediately dilute existing shares, convertible bonds delay this dilution until the conversion actually happens. So basically, by issuing convertible bonds, MicroStrategy can raise capital at a lower cost while postponing the dilution of their existing shares. So, how does MicroStrategy leverage buying Bitcoin using convertible bonds? Think about it like this. If MicroStrategy holds $37 billion in Bitcoin and the company's worth is $90 billion, by issuing $9 billion in convertible debt to buy more Bitcoin, their Bitcoin holdings increase by about 25%, while equity is only diluted by around 10%. This means shareholders end up owning more Bitcoin as the company issues more debt. This buying activity puts upward pressure on Bitcoin's price. As Bitcoin's value climbs, MicroStrategy's stock price also increases because their Bitcoin holdings become more valuable. And guess what? The cycle repeats. Back in November 2021, Citrini Research published an excellent piece discussing MicroStrategy's equity, convertible notes, and the premium over its Bitcoin holdings. They described this phenomenon as a perpetual motion machine. In a Bitcoin bull market, it's the financial equivalent of a perpetual motion machine, reflexivity incarnate, where higher Bitcoin prices drive a higher premium, which allows more equity and debt issuance by MSTR. That, in turn, results in more Bitcoin on MSTR's balance sheet, buying pressure which can drive higher Bitcoin prices, which drives a higher premium again. So that basically explains how MicroStrategy skyrocketed this year. Right now, if Bitcoin's price goes up, MSTR stock will rise too. Creditors might even decide to skip cash repayment and convert their bonds into shares to take advantage of the higher value. But what about the worst-case scenarios? If Bitcoin's price drops but MicroStrategy has enough cash on hand, creditors can still get their money back in cash. No harm done. Now, if Bitcoin's price drops and MicroStrategy runs out of cash, creditors have a backup plan. They can convert their bonds into stock to try and recover their investment. The real nightmare scenario happens if Bitcoin's price tanks, MSTR's stock price crashes, and creditors are forced to sell off their MSTR stock to get their money back. That could trigger a vicious cycle where the stock price drops even further. So, will that worst-case scenario actually happen? If MicroStrategy runs out of cash to pay creditors when the notes mature, 3 years from now, they might need to sell some of their Bitcoin to cover the debt. But here's the thing, their next bond repayment isn't due until February 2027. In short, even if Bitcoin's price takes a big hit in the near future, MicroStrategy doesn't need to sell off its Bitcoin holdings right away. They've spaced out their debt maturities, giving them a solid cushion to weather any short-term drops in Bitcoin's price. So this may be one of the reasons that people are buying MSTR at a premium. Now we get why MicroStrategy is issuing convertible bonds to buy Bitcoin, and how that's driving up their stock price. But here's the question, why are investors buying bonds from MicroStrategy instead of just buying Bitcoin directly? And how is smart money making profits with MSTR instead of simply hodling? That's where convertible arbitrage comes into play. It's a financial trading strategy that exploits the price relationship between convertible bonds, with their embedded options, and the underlying stock. This strategy is typically executed by institutional investors like hedge funds. The core idea is to hedge risks while capturing arbitrage opportunities from price fluctuations. Let me break it down for you. Let's expand the explanation to include delta, how it works, and why investors adjust their short positions. Imagine an investor buys a convertible bond from a company. It combines features of both bonds and call options. The bond part offers fixed interest payments, providing steady income and principal protection. The option part gives the investor the potential upside if the company's stock price increases. Next, the investor hedges the directional risk of the stock by shorting the company's stock, selling shares they don't own with the intention of buying them back later at a lower price. This creates a delta-neutral position, meaning the portfolio is relatively unaffected by small changes in the stock price. Now, what is delta? Delta measures how much the value of an option, or the convertible bond, in this case, changes in response to a $1 change in the underlying stock price. For example, if the delta is 0.5, the bond's option value increases by 50 cents for every $1 increase in the stock price. Every convertible bond has a conversion price, which is the price at which the convertible bond can be converted into shares of the company's stock. For example, if the conversion price is $50, the bondholder can exchange their bond for stock at $50 when the market price of the stock exceeds $50, making conversion profitable. So when the stock price is far below the conversion price, the delta is low because the embedded option has little value. It's unlikely the stock will rise enough to make conversion worthwhile. In this case, the investor shorts fewer shares to maintain their delta-neutral position. However, as the stock price rises and approaches the conversion price, the delta increases, getting closer to 1. This means the bond behaves more like the stock itself, as the likelihood of conversion increases. To maintain a delta-neutral position, the investor needs to short more stock. By doing so, they balance the growing sensitivity of the bond's value to changes in the stock price. Here's the key: as the stock price fluctuates, the investor constantly adjusts their short position based on delta. If the stock price rises closer to the conversion price, they short more shares. If the stock price falls away from the conversion price, the delta decreases, so they buy back some of the shorted stock. This strategy allows the investor to profit from the volatility of the stock, not just its price direction, while locking in steady returns from the bond's interest payments. It's a sophisticated way to manage risk and capture gains in fluctuating markets. So, we can conclude that investors buy convertible bonds from MSTR mainly because of its volatility. Bitcoin has higher volatility than most other assets, and investors can easily profit by using arbitrage strategies with the convertible bonds. Now, let's talk about how this convertible arbitrage strategy has been performing. As of the first 4 months of 2024, convertible arbitrage strategies have delivered an annualized return of approximately 13.2%, outperforming other relative value strategies. Some hedge funds specializing in convertible arbitrage, like Linden Advisors and Context Partners, reported annual returns of nearly 12% and over 6%, respectively, in 2023. This demonstrates that convertible arbitrage remains a strong performer under suitable market conditions. So, investors might prefer buying convertible bonds from MicroStrategy because it allows them to implement this convertible arbitrage strategy. They can benefit from the bond's fixed income and the potential upside from the embedded option, all while hedging their risks through short selling. This approach might be more appealing than directly buying Bitcoin, which is highly volatile and doesn't offer the same hedging opportunities. It's a win-win that explains why investors are flocking to their bonds instead of buying Bitcoin outright. Now, let's dive into some speculation about MicroStrategy's trading premium. Why are people still buying MSTR despite it trading at a significant premium? Personally, I speculate that one key factor could be Trump winning the U.S. presidential election. His pro-crypto policies include the potential establishment of a national Bitcoin reserve. But would the U.S. government actually buy Bitcoin after making such an announcement? By then, Bitcoin might already be trading above $200,000 per coin. So some people believe MicroStrategy's ultimate goal is to become the U.S. government's Bitcoin proxy. If Michael Saylor, MicroStrategy's CEO, had an understanding with government officials to help the U.S. preemptively acquire Bitcoin, it would allow the government to lock in purchase costs before officially establishing a strategic reserve. Considering MicroStrategy's massive Bitcoin holdings and Saylor's influence in the crypto space, this theory isn't entirely far-fetched. From a hybrid warfare perspective, if such an agreement existed, MicroStrategy would become more than just a financial or tech company dealing with Bitcoin. It would be a strategically significant asset for U.S. financial and national security. In such a scenario, the company's value couldn't be measured by traditional metrics like price-to-book or price-to-earnings ratios. The surge in MSTR's stock this year could already be the beginning of such a shift. Of course, this is all speculative, and there's no concrete evidence to support these claims. But it's an intriguing idea that adds another layer to how we might view MicroStrategy's aggressive Bitcoin strategy. And that's a wrap on our deep dive into MicroStrategy's bold Bitcoin strategy and the intricate world of convertible bonds. Their aggressive acquisition strategy, fueled by issuing convertible bonds, has not only amplified their Bitcoin holdings but also created a fascinating financial phenomenon. We've delved into the mechanics of convertible bonds and how investors use convertible arbitrage strategies to profit from MicroStrategy's stock volatility. We also touched on some speculative yet intriguing ideas about MicroStrategy's future role in the broader economic landscape. Could they become a Bitcoin proxy for the US government? I'd love to hear your thoughts. Do you think MicroStrategy is paving the way for corporate Bitcoin adoption, or are they venturing into risky territory? Is investing in MSTR a better move than holding Bitcoin directly? Drop your comments below and let's get the discussion going. If you found this video insightful, make sure to give it a thumbs up. And if you haven't already, hit that subscribe button to join the MacRader community. Don't forget to turn on notifications so you won't miss any of our upcoming content. Catch you in the next video.